In this video, I'm going to walk you through how we understand the range calculator as a whole. So if you'd watched the Roth conversion video, you'll know that the range calculator is going to show you what the tax impact is going to be of the next $1,000 of ordinary income that we add on. So it's going to tell you that at the very top. But the most important thing to note with the range calculator is where to start. So our y-axis here is going to indicate marginal tax rate for our client. Our x-axis is going to indicate added income to the client's baseline taxable income. So at your origin, at 00, you're starting at your baseline taxable income of $69,430. When you hover your mouse at the very beginning, you'll see that black tick mark on the bottom, $0. It's showing you where you currently stand, right? So at your baseline taxable income, we are in the 0% for our net investment income tax, 0% for our enhanced senior deduction phase out, 10.2% for our Social Security taxation phase in, 0% for our cap gains, and 12% for our ordinary income. As we move to the right, we're going to see the tax impact that it has on us to add, up to $27,000. We're going to see no change for this client. After $27,000, we're going to see that first spike of that red amount showing, okay, now we're entering into that 15% for our cap gains. But what's important to note here is that though we've triggered the cap gains, our tax on ordinary income still haven't changed yet. So we've got a little bit of wiggle room before we move out of that 12% bracket. So you'll see here at $32,000, we're still in the 12% bracket. Anything after that, we're bumping in to the 22% bracket. Now, if your client was interested in maybe filling up the 22% bracket, but not the 24, you could show them here that if we add, say $95,000, we're going to run into that enhanced senior deduction phase out. But also right here at $96,000, what we're going to trigger here is IRMA. And so this is really important for clients that are doing a larger Roth conversion who do not want to have this extra cost added on. So at $96,000, that's where we would trigger IRMA for this client. Now this number on the inside, that $1,052.40, is per person per year for that IRMA amount that you're going to trigger, those Medicare B and D annual increases. So it's important to note that if we're doing something over $96,000, that is going to be an added cost for us. Same thing as we continue through. So we're in the 22% bracket all the way up until 130. After 130, we're bumping into the 24. And so if we wanted to take our client all the way up until the 24% bracket, we would have to notice that we're going to be running into these other premiums that are going to fall in the way. This is our ordinary income graph. So this one is our main focus is ordinary income. Down below is actually our capital gains graph. So it might look like for a second that our capital gains up here, flashes and then goes back down. We know that it's going to stay in the 15% until we hit the 20. This is actually accounting for how many capital gains your client currently has. But down here, it's going to show you the full impact of those capital gains, including any other deductions or increases that are going to occur as well. If you're ever confused about the range calculator and you want a walkthrough of each step, this What Does It Mean tab on the right-hand side of your screen, you can open up and hit the drop-down bar, and it actually will walk you through each part of the graph and show you the upper graph and the lower graph and what it's conveying for our advisors. That is how you would use the range calculator to help your client in their tax advising needs.